Hey everyone, welcome back to Corporate Decoder. Today we're diving into a cruise line's financial moves. No need to pack your bags, this isn't a vacation unless you think high finance deals are a relaxing getaway. Before we set sail, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come join us. In this video, we're looking at how Royal Caribbean Cruises is changing its credit agreements. They're basically borrowing more money and extending the time they have to pay it back. We'll break down why they're doing this, what it means for the company, and what it could mean for you if you're thinking about buying their stock or even taking a cruise. Scrolling to cost its coursities and exchange, scroll. First, let's look at the basics. This is a Form 8K filing, which is like an urgent update a company sends to the Securities and Exchange Commission, or SEC, when something important happens. It's a quick snapshot, not a full financial report. The report is dated May 14, 2020-2025, so this is pretty fresh information. Royal Caribbean, the company we're talking about, is officially based in Liberia, but their main offices are in Miami, Florida. Their stock trades on the New York Stock Exchange under the ticker symbol RCL. Okay, the main event. Item 1.01 talks about entering into a material definitive agreement. In plain English, this means they made some important changes to their borrowing agreements. Specifically, it involves their unsecured revolving credit facilities. Think of these as credit cards for big companies where they can borrow money up to a certain limit and pay it back over time, the 26. And October of 2026, 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 and October of 2026. And October of 2026, and October 2026, and October of 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 2026, and so what did they change? First, they increased how much money they can borrow. They added $1 billion to each of the credit lines, bringing the total available credit to $635 billion. That's a lot of potential for new spending. They also extended the deadline for one of those credit lines. Instead of ending in October 2026, it now ends in October 2030. The other credit line still ends in October 2028. This gives them more time to repay what they borrow. Scroll, the ability to increase from time to time the aggregate capacity scroll. Here's another interesting detail. The deal allows Royal Caribbean to potentially increase the total borrowing capacity of these facilities to $8.35 billion in the future. But they need to get more lenders to agree to provide the extra money. Scroll conditions, covenants, representations, and warranties. Scrolled. The filing also mentions a bunch of legal terms like conditions, covenants, representations, and warranties. These are basically promises and rules Royal Caribbean has to follow as part of the agreement. If they break these promises, they could be in trouble with the lenders. Item 2.03 just points back to item 1.01, saying that the borrowing changes create a direct financial obligation. This isn't new information, just a formal way of saying they've taken on more debt. Item 701 mentions a press release about the changes. Companies often put out press releases to explain important news to the public and investors. We can find that press release as an exhibit to this filing. Finally, item 9.01 lists the exhibits, which are the actual documents related to the credit agreement changes. This includes the amended credit agreements themselves and the press release. Now, let's step back and analyze what this all means. Royal Caribbean is increasing its access to cash and pushing back deadlines for repayment. Why would they do that? Well, the cruise industry is capital intensive, meaning it requires a lot of money to operate. Building and maintaining cruise ships, paying for fuel and staff, and marketing cruises all cost a lot of money. By increasing their credit lines, Royal Caribbean gains more financial flexibility. They might need this extra cash to invest in new ships, expand their routes, or simply handle unexpected expenses. Extending the repayment deadline also gives them more breathing room to generate revenue and pay down their debt. There are some potential risks. Taking on more debt increases the company's financial risk. If the cruise industry faces another downturn like what happened during the pandemic, Royal Caribbean could struggle to repay its loans. Also, interest rates could rise, making the debt more expensive to service. However, it's also possible that this is a smart move. If Royal Caribbean can use the extra cash to grow its business and attract more customers, the increased debt could be a worthwhile investment. The extended repayment deadline gives them more time to execute their plans and generate profits. Overall, this credit agreement change is a significant event for Royal Caribbean. It shows they're confident in their ability to grow and generate revenue, but it also increases their financial risk. Investors should carefully consider these factors when deciding whether to invest in the company. Looking at Royal Caribbean's direction, it seems they are banking on a strong recovery and continued growth in the cruise industry. This could pay off handsomely if the economy stays strong and people keep wanting to take cruises. However, they are now more vulnerable to economic downturns or unexpected events that could disrupt the industry. I'd keep an eye on bookings and economic forecasts to see if their bet is paying off. Alright, that's our breakdown of Royal Caribbean's latest financial moves. What's your take on these changes? Do you think it's a smart move, or are they taking on too much risk? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.